Yo, what is up? I got my boy Sharky here. I'm going to pull him up here in just a minute. Market's got a case of the Monday, guys. Got a case of the Mondays. Going a whole lot of nowhere. What's up, yo? Sharky's in the house. What's up, man? There he
What's
is.
going on? Hope you had a good weekend. Good to see
Oh,
you.
man. Actually had a really good weekend. Had a baby shower, believe it or not. Um,
Oh,
Paper Gains Junior's on the way. So
congratulations.
wish me luck with that, man. That's gonna be number one for me. So
That's awesome, man.
like scared, excited, everything all at once.
Oh yeah,
Uh,
yeah.
man, it's gonna be nuts. All right, well, Sharky's doing his thing. He's probably gonna go get his water real quick. What I'm gonna do here today, guys, we're gonna do really quick, just like a rundown of where we are in the market. I'm just going to tell you right now. Yeah, I knew it. Just going to tell you right now. I don't see this market going a whole lot of anywhere. So you probably don't have a ton. Yeah, you're probably not going to miss a whole lot, right? We haven't triggered any direction. Quite frankly, we have triggered totally sideways. So if you are an Iron Condor fan or a sideways chop fest person, then today is your day. Congratulations. You win. Market makers win, option sellers absolutely win. But that said, I do have a couple trades on deck. Oh, that's a long one. I don't know if I can read that whole thing. From, okay, I'm gonna take this down. All right, so Daddy Shark.
Well, I think we have to start off by saying how great you look in this suit. I mean, this is.
Oh, the Santa suit, man. Absolutely. Right. This
I was
is
hoping you were going to wear it. You'd be wearing it for the show, but we're not there yet.
almost. I was looking for my shark suit actually for Halloween, man. But not quite. I did want to have by the way, this theme, right, is like the Santa Claus rally. Appreciate you guys. Yeah, it's a big deal. Papier Jr. is coming home very soon. Not this month, early next month. So wish me luck.
Well, is he? I guess maybe papyrus. He does. He hasn't
Papyrus.
fully. Yeah, he hasn't
Papyrus.
fully. He hasn't fully turned to paper yet.
Yes, this is fair. You know what? By the way, he's like a little over a month, and he's already like 6 pounds, dude. When they measured her last, so like I'm telling Mama Gaines, like beware, this is not a small baby for sure. So wish her luck. Really, I think is the one. So we had a really good week, right? Like a really good week. Actually, we had the best week of the year. I believe it was the best week of the year
Yeah,
last
yeah.
week. What I'd say here is like the market looks long, right? But it's very hard to have new money longs come in right now, right? And I always have the saying, the market is running or resting, right? Look at this. You got stash
Yeah.
hands. Yeah, so like Santa Rally is a thing. And we're going to go over that today because I want you guys to know the Santa Rally, there's a couple different things, nuances to the Santa Claus Rally. There's like two parts of the Santa Claus rally, but the first part starts like right now. So if you weren't thinking Santa Claus rally, you should be thinking Santa Claus rally. While this is not the spot necessarily to get long right now here today, you should be thinking probably dip buys in general. And last 2 weeks really like, and last week it really kind of came to like my culmination of like, look, there's nothing good. I usually like to find some good things to say about the market. I could find nothing good to say last week, but we were in such a good technical spot that it was like you really just had to like close your eyes, hold your breath, and hit buy for the long-term portfolio. Not trading, but for the long-term. From a long-term perspective, last week was the spot that was like, this is, if you were to ever find a retest of a breakout, that was like a very picture perfect retest of a very significant breakout. And we had actually priced the market all the way back to February at a certain point. So that said, I think that I'm going to go ahead and step on a limb here and say that the low for the year is in. Hopefully, put myself out on a limb as some things look like they're falling off. Tesla might be a short, by the way. And last week I think it was, we had lost a fallen soldier, like of the Mag 7. Tesla looked like it was falling off, right? And I think I actually said we lost it. Today, Tesla's battling this 200-day, but who saw this crazy week? Last week. Like, I mean, I saw pictures on Twitter of like, what's this meme stock SPY, right? Like,
Yeah.
it was a serious rally, right? And so, again, going back to the markets are either resting or running. We've had a big run. We've had a very big run. This is not the time to get over your skis. Not the time to press serious bets. We're not making new highs just yet. Mark that Friday high, this last Friday's high, on your charts. Honestly, I think that if we are trending, as in like if we have a clean day's open and close above last Friday's high, whenever that happens to be, probably not this week, maybe next week, then yeah, we're ready to roll, right? And in the meantime, between now and then, we have a very clean tradable range to trade off of. There's a difference between like, something's not going down anymore and something's going up. So for you options traders out there, I just want to preface this as a serious thing. Just because something's not going down anymore doesn't mean it's going up. So you can't just go out and buy calls. So that said, let's get into the meat, right? So I have a couple headlines from last week that I did pick out. Sharky, if you want to bring up anything, there's just a couple of major ones. I do want to go over the FOMC meeting last week. There was a couple key things that he did say that I think are worth our time talking about. Otherwise, UAW reaches a deal with GM, Ford, and Stellantis. I think that was a big deal. If you look at the chart of HYG or corporate bonds, high yield corporate bonds, that thing looked like it was going to fall off a cliff. Actually, bonds in general were falling off a cliff, and we had some serious bounces in the last couple of days. Let's see, what is Nick saying? Something Jesse says, we are going. Where are we going, and how do we get there? Yeah, how do we get there, right? Like we can take a little bit of a pullback here, and I think we're all probably kind of thinking about that, right? A lot of things have run right into resistance. Actually, Sharky, when we get into the charts, if you want to share your screen, I know that you have a really nice SPY levels lined up. I don't know if you want to be able to share that too, but if you can, by all means. And a couple other things to note. So last week we actually had mortgage rates fall for the first time in 2 months. Woohoo! Right? Like that's a big deal. Just this is rates coming down in general. And if you're looking at the data, you're kind of thinking like, this is weird, right? So the job market is super tight. We know that. The economy is strong, right? But inflation is elevated. So in the notes here, I have job market too tight, economy too strong, right? So what's still going on is bad news is still good news, and good news is still bad news, right? When we got our NFP numbers out last Friday, also, we had some serious revisions. And if you guys remember October non-farm payrolls, that print came in literally 100,000 jobs over the estimate. All of it revised away. All of it revised away. So, like, what's going on with these NFP numbers? They almost feel like ADP numbers at this point. So hopefully non-farm payrolls doesn't become less of an event. But they're a little skeptical in general now. I think some of the feedback from the people that record this was really like, hey, look, when the economy is kind of slowing down, people are a bit slower to respond. And so some of the data that they were getting in, it's not a problem with the way that it's calculated necessarily, but a lot of the data, if people don't, or organizations don't, this is triggering short on Tesla for sure. If people aren't responding to the survey, then they just kind of like guesstimate, right? So, and they'll guess it based on similar, sectors and things like that. But we don't know when they're doing that, which is kind of funky. But that's basically what happened. I think the biggest thing in general, we were talking about this bond yield thing. When the rates are super high, that means, and we were talking about the deficit, right? So like how much interest is the government paying, right, on a monthly basis or on a just regular basis? With rates so high, and we saw so many bond issuances over the last couple of weeks, is seemingly like every day we got a new bond issuance. It was wild, right? And the more that they're this is when they issue bonds and they have an auction, it's essentially like flooding the market with more supply, more supply, more supply. And so the demand becomes lower and lower and lower, and therefore they have to bring rates higher and higher and higher to make them more attractive. And that's what we saw. It was like this vicious cycle. But the higher that rates went, the more that the interest payments became, how much the government has to pay to service this debt that they're issuing. It looked really bad. And so one of the things that they were talking about was, look, Powell did say he's going to stop like the crazy issuance of bonds. So hopefully we see less of that. I'll tell you, this week so far, it's not kicking in. But he did say that moving forward, and I think this was probably one of the key things, moving forward, they're going to be issuing less bonds in general. And the market really liked that commentary. In general, though, it was, we were expecting hawkish commentary just so that he, keeps his footing. But I think really he gave a lot of dovish commentary, which was, I wasn't really expecting, but it is what it is. So that's what we got. Jumping into some of the numbers really quick. So we did get employment costs. This is what we're looking at. So how much are companies paying employees more or less, right? This is employment costs going up slightly, not really a big thing. ADP numbers coming in lower, right? Lower than consensus. Consensus at 150. ADP comes in at 113. Non-farm payrolls is all the way down here. Consensus was 180. We came in at 150. So, and we revised at the same time. We revised prior month down 100,000. So this is an example of bad news was good news for the market. And really, it just kicked off on Wednesday, right? So like once Powell was up on a stage, it was really Wednesday that the market went a little bit haywire. Moving forward, I'm going to go ahead and jump into just this week, right? So we do have 3 and 6 month bill auctions today.
Yeah. What time are those? At 1 and 2?
Yeah, those are already done, actually. This week we have a ton. So here's let me see. Am I showing this? Yeah, you can see this. So in back. So Monday. So 12:30. This is specific. So it'd be right about now. Let's see if the market reacts literally right now. It looks like they came through already. Maybe a half an hour ago. UTC -7. Anyways, they came in slightly lower. So it looks like there was some appetite for these short-term bonds or bills, short-term T-bills, short-term issuance. They call T-bills. Longer term is like bonds. It's the only difference. But look at this. We got a bunch of speeches. 1, 2, 3. We are just like loaded. 4, 5.
Yeah. Blackout period ended.
Yeah. Blackout period ended. And you know how much these guys love to talk. So we have speeches all week long. We actually have Powell twice this week. And maybe you guys will know, but like I saw this. So Powell here, this is Wednesday, right? At like just 45 minutes after the open. And then again, towards the close on Thursday. So I don't know. This is not like a testimony thing. It literally says speech. So he's got 2 speeches back to back. Every time I think that we're in the clear, like Pete Powell, he pops up again. Maybe,
right. Yeah.
Maybe he'll try to backtrack a little bit of what he was saying before. Who knows? But just remember, right? Powell, the Fed, has two charters. Number one, promote full employment, which, by the way, we are pretty much there, right? So if we look back at the numbers, right? In terms of employment, we're doing good. Unemployment rate 3.9%. We are at like a 64% participation, give or take, pretty close to that. That's pretty good. And control inflation, right? So now we're into this control inflation thing, and his only tool really for either one of those is interest rates. So, it is what it is. But our average hourly earnings, I was listening to some lady on CNBC this morning, and she was talking like, oh, job market's really good, this, that, and the other. And like people have more money than they did this time last year. And I'm thinking, do people really feel that way? Like, do they really feel like they have more money now than they did last year? I don't know, right? Not Josh or Whale sends me like screenshots of his Uber Eats receipts, and he's like $100 per meal, and I'm like, yeah, dude, you're spending like California money over there out in Florida, and I'm like, oh, geez, I mean, really, you go. it's like $15 burritos out here. Like I don't know what's happening.
Yeah. Yeah.
But I don't know. I don't feel like I have more money in the bank than I did last year. But I guess
Well,
that's
yeah, and
I got
obviously it
babies
doesn't
coming
go
in.
as far. And I wonder that too. It's not like are the companies really going to be that quick to drop it over to the consumer? Probably
Yeah,
not. They're just going to keep it. I mean, why would
yeah,
maybe
yeah.
they would lower a little bit, but I saw something from Cook this morning. I posted it. He said. Americans may be pessimistic because they are not just looking for slower inflation, but for prices to return to where they were before the pandemic. And to me, it just doesn't seem like that's ever going to happen.
Yeah,
I
I
don't know.
mean,
I would love it. I mean, it's
yeah.
horrible, but
No,
it just
well,
doesn't seem like it's a realistic, that it's a realistic viewpoint to think
I
that they
feel
are
like
going to go
most
back.
like professional, like let's say companies and like responsible households. I don't know. This is just me, it's personal. Well, I could be wrong, right? Feel like yeah, even if I did get a little extra this time this year, I would still be somewhat cautious, right? Because we just went through a crazy like roller coaster, right? Like a crazy roller coaster of the economy, just in general, what's going on. Nobody's ever had to go through something like COVID. Like, did we have our stockpiles of toilet paper or like cash or whatever, right? But um, I, I just kind of feel like I would rather be more prepared moving forward than I was last time, which at a certain point would mean maybe saving more. But again, we see these retail sales numbers and we see like what's going
And a
on that
bunker
front.
full of toilet paper, I guess, right?
Yeah, for real. Um, but who knows, right? Like what's true right now is that the retail sales numbers are good. People are kind of spending. Manufacturing is pretty low. So, we'll see. We had that GDP forecast, by the way. I want to bring this up. It's not on any of these slides. We had a GDP forecast that came in at like 4.8, super hot, right? For last quarter. And that actually did move the market. I'm positive that we're going to get some serious revisions to that print as we move forward. So we get 3 looks at GDP. This last one, 4.8. As they revise that, that's too hot, right? I think that when the market was really going down, that was that last leg down when we got that 4.8 GDP print, preliminary print for Q3. I think as we revise that, then that will be one of the driving factors, kind of like to make the market grind a little bit higher. So just keep an eye on that GDP. Hopefully we get some revisions lower. Moving forward, we just got a quick look at earnings so far. So I tracked the Dow 30, so top 30 components of the S&P, top 30 components of the Dow Jones. We've actually gotten 24 of these companies that reported. So we're pretty much there. And, if you look at this data, there was only really one quarter, and this was Q4 of last year, where we had a lot of misses, and we're not trending down. So the whole thing about earnings, peak earnings, things like that, we're still right on par. So that's not going to hit this quarter. The talking heads might tell you that they are, but look at the data, right? It's not looking bad. This week we do have we've pretty much passed the peak of earnings season. We're going to get into some smaller companies now. Disney is the only Dow 30 component that we have to go this week, and I believe it's Nvidia the week after next. So that's the last major one, but they're at like the end of the month. But I think, if people are looking at this, I'm kind of interested in Celsius. I'm long Celsius. I have a couple of my holdings up this week. Oxy is going to be cool to watch. We'll see. Usually not a big mover on earnings. But there is this one kind of like outlier that if you're looking at the earnings from last week, we did have an earnings trade last week was shortbill.com. If you took a look at Paycom last week, they're down like 40%. Confluent was down a pretty hefty metric, and Bill was down about 40% at the lows at one point. These are all payment processors for medium-sized tech. So that's where I would probably say to be a little bit cautious. If you look at the indices today, and we will in a second, IWM is the weakest of the week by far, right? High beta, but that thing is not looking good at all. That said, that's how it usually looks. It's usually time to buy it when it looks the ugliest, kind of like gold, but we'll see, right? I do think, just in general, my commentary is like there's probably a handful of companies. Let's say I call them like weeds to pull when I was talking to our buddy Jaguar. There's probably some weeds to be pulled still in that kind of like mid cap space, specifically around tech. Datadog is going to be the biggest flyer here. This is tomorrow in the morning before the open. Datadog will move Snow. It will move IGV in general. So IGV is the software sector. I think that's one to watch in terms of like a pairs trade, or what can you expect from that sector moving forward, right? We had a lot of good stuff. We do have CRM coming later. Do we have CRM? Where is CRM? I don't think it's this week. It might be next week. Maybe like next week. CRM's been good. But watch Datadog, see how this trades after market. I don't really have an opinion one way or the other on these guys, but
it's December 6th. I don't know if that's true.
Oh, maybe they already reported and they'll have to go for a while. But yeah, Datadog's going to be your biggest market mover, so that will move the entire sector, IGV. So just keep an eye on that, and it will move software tech as a whole, So if you're any of those small names, like I can't even think about it off the top of my head, but just a heads up, right? Then we have Roblox, WBD. I don't think is going to be a big one. Like a HubSpot, Duolingo, these are right in that spot, in that same space. Twilio is the next largest software, and then Unity, I think, from that perspective. Those are all major components of the IGV or Digital Turbine. There you go, APPS. So Datadog will move Digital Turbine. Will likely move HubSpot, Duolingo. Yeah, Trade Desk. Man, Shopify had a good one last week, but we'll see if it can hold its gains. I am short Roku right now, though. That is one I'll probably swing short. But anyways, all right, I'm gonna do a quick update on what the Santa Claus rally is. Then we're gonna hop in the chart. So sorry for taking so long. So here's a chart of the Santa Claus rally. Little known fact is that it starts way before Christmas, and so here we are in the beginning of November. This actually kicks off somewhere around Thanksgiving. So not this week, maybe next week, but the next 2 weeks, start looking for what's my shopping list going to look like. And this is your next seasonal kind of press, right? It ends before Christmas. Just so you know, the Santa Claus rally ends before Christmas. And then we're off, right? So like there is sometimes a little blip on the radar, and that is like from Christmas Eve to January, like the very early January, early days of January. I think January 5th or 10th, something like that. From December 26th or 7th through January 10th. Sometimes we get a little bit of bounce. That bounce is at most like couple percent. This is what the actual percent looks like on a historical basis from 1950. 1.5% to 1.6% for December, between late November to late December. So that's about 3.5%, maybe 4% on max. Actually, Sharky, do you want to go into Miss Cleo, or you want to hit the charts first?
We could. I tried to. We'll link a little bit next time beforehand. I tried to do the stream thing, but I can still go over the levels without sharing this time. But we'll get it set up proper.
You can share on your end if you want to go through the levels.
I tried it. It didn't work. But we can do. Let's have a little fun. We just talked about GDP and all this stuff. Why don't we change up the mood a little bit and get into some our next segment?
Well, all right. So
are we ready?
Ready? Go. All right. This is Miss Cleo, and if you guys aren't aware, this is our friend. She does a reading every Monday morning, and we get the reading, and I'm gonna go through it. She's been on a bit of a, I don't know, she was on a really heavy hot streak for a while. I kind of feel for Miss Cleo this last couple weeks. She's been a little rough spot for sure. Today, as an example, she did say that there's a chance of a strong trend day. That said, you know what? The day's not over.
That's it. She's fired.
Yeah, the day's not over. I'm looking at the charts right now. Right now, this second, we're about to finally get a trend. Maybe looks like to the downside. Yeah. Maybe. But give her a shot. the day's not over, right? So I'm gonna go ahead and read this really quick. If you can't, this is the reading. She does these little cards. These are the cards that we got. Right. So the theme card is the Six of Cups. And and this is Miss Cleo kind of giving her little preface, right? Of like what she means by certain things. What she'll say is she tends to say, look, I like to predict the setups, but not like necessarily the direction. So she's seat covering her butt. Right. So Six of Cups suggests positive feelings, but also desire to go back in time to when things were simpler. Since last week was nonstop upside, we may be wishing to go back to that price action instead of what we're seeing throughout this week. So that she's saying a little bit of a pullback is due. I would tend to agree. We don't have a lot of data for this one, but the data we do have suggests negativity at the close. Oh. And that's actually kind of what I'm seeing right now. So maybe she gets to keep her job for a little while. Let's see what the daily clubs cards have to say. So I just did a quick recap. She did say chance of a strong trend day. Don't have a trend quite yet. Tuesday, historically negative. But the recap, and I'm going to begin with the end here. The recap is this is a tricky week full of big energy cards. Monday trend into Tuesday stall. So she's saying Tuesday is a stall day. That's tomorrow. Wednesday trend and then fade. Okay. Thursday volatility takes us to a trend day on Friday to close it out. Okay, so big trend.
Instead of big wick energy, I guess it's big card energy, right?
Yeah. Yeah, so these are the cards, right? Oh no. Where did we go? Come on, card. So let's see. I was trying to get this. These are the cards.
These are the cards.
These are the cards.
The hangman. Oh, okay.
Yeah. So Ace of Wands, right? Nine of Swords. So King of Swords. Ooh. That the question is, does the king come to chop us down? Tomorrow's a hanging man. Eight of Swords. So this is the trend day, and this is the trend day. This is what he's saying. She's saying. He, she, who knows? Here are the actual days. So first I want to comment nature of these readings. I mentioned last week the swords are usually negative. That's today. And for some reason, people took that to mean they should get short. I really say short, Now let's get to... So like the king, this card is trendy and quite strong. It too is historically positive, so don't get surprised if we start the week off in the green, which we kind of did. Yeah. The theme card offers that chance. Okay. However, this can cut down easily, cuts higher, blah, blah, blah. What day do I really want to read? So she said Wednesday. I want to read Wednesday. Queen tonight. Okay. And the swords are strong this week. This guy usually charges forth with a big boost of confidence rally, only to give up ground mid-session. Okay. So early pop, then reverse. While he almost always guarantees a rally, he has closed red all 3 times. Ooh, open green to close red. All right, that's a big day. So here's what I would say. If Monday was red, Wednesday likely will be too. She said sell any rally. No shit. If we gap up and fly higher, then sell that too. Ooh, there will be a buyable tip. It says tip, but it'll be a tricky to time. Okay, fine. Friday night. Queen to knight to king means there is likely a trend established and some precedence to guide our decision here. I think this day will be a stronger version of Monday. Hopefully, God. Last week, the king fully retraced the overnight rally only to rocket back up. He is historically positive, but again, don't go all in until the trend is established. Our theme card says we'll be wishing for better days. So we may be wishing for last week's king instead of this week's. I'll issue more advice as the week progresses. So that's Miss Cleo in a nutshell. Give it up for Miss Cleo. Yay.
All right. No more witchcraft now.
Yeah. So I'm going to jump into the charts here. So what I'd say, so you guys know me, I do non-farm payroll stuff. I think that I'm a firm believer that fundamental events do create our technical levels. That goes for earnings and all of that stuff too. This is my everyday view, right? So SPY, Qs, diamonds, DIA. IWM, the redheaded stepchild of the market, does whatever it wants. I only need these 3, 1, 2, 3 to go in the same direction, have a strong trend. My confluence, right? So my other factors that I'm looking at right now, Dixie, the dollar index, TLT, this could be 10-year yields if you want, or 2-year yields, either way. I'm just using this TLT right now. Seems to be headline in the news. Gold, I'm looking at gold. and I'm looking at actually I have USO here, but really it's crude futures and gold futures. That's what I'm actually usually looking at. So these three things. So if the Dixie is going down, I would expect the market to start going up. If TLT is going down, that means bonds are going up. That's inverse. And I think that if the bonds are going down and the yields are going up, that's negative for the market. The inverse is true. If TLT or the bond is going up, that means yields are going down. This should be a positive for the market. For right now, what's true, and I'm going to take this orange box. This is an average week's range. By the way, this works all the time, right? Like this is pretty stable. This was last Monday, and average week's range we said to the downside was going to be 411, give or take. We had, if you guys want to see how accurate these non-farm payroll levels are. So this was a session gap. This right here, 409.43 was a non-farm payroll level. That brought us all the way back to April. And then 413.67, boom, boom, boom. That was another from February. So when I said we priced the market back to February, that's what I was talking about. We priced it back to February of this beginning of this year. So that's a great buy, right? Then we did break structure, and that was so Monday, Tuesday, Wednesday, and we were off after Wednesday. And a full average week's range to the upside from Wednesday was only to 433.25. We actually extended that. So we extended it at an average week's range on both sides, which is a very normal thing for SPY. So big moves in both directions. So I think a little bit of something for everybody. Here's where we are today. So when I do the non-farm payrolls, I usually take it from the moment that the market gets the data, right? And so the moment the market got the data last week was Friday, right at the pre-market, right? 430.55. That's where we were sitting. That's where, boom, we just shot right up. And then the day's high, I'm going to take that day's high, 436.29. And let me go ahead and make this a little bit bigger for you guys. 436.29. What's true right now is that if we're trending in between these two ranges, so if we're trending in between Friday's range here, I expect nothingness, like total nothingness. So expect to chop in this range right here. It's not going to be until we have a clean open and close above or below either one of these two levels that the trend is firmly established for the month. And that's how that works, right? So if you're looking at this, just moving back to October right here. So we had our non-farm payroll level here, high. This day wasn't clean, but this day, boom, right? Clean open and close above. We're going. And that was really like straight up level to level. So we went to 438 and then we actually cracked back below. We think chop. Okay, we hit the bottom of that level and then we extended lower, went level to level. So today we have a lot of upside resistance. We are pretty protected way down here. So I think in general, like this should be the lows. I'm just going to take a quick fib. Quick fib. Just, where's my fib? Here. So swing low to swing high. That's going to put you right about 423. So if I get a shot, 422, ooh, yeah, that would look really good to the downside. I mean, we'd be short below 430, down to like 422.50. That would be about a 50% retrace right there. If we have an extension to the upside from today's high, maximum 445, maximum, right? And I know Sharky, you had a lot of this kind of lined up, but I do want to say that we are running right into a ton of overhead resistance right here. So if we expect this market to really just be chop, and that would make perfect sense, I would really say that this is going to be kind of like the range that we could be stuck in for a little while. That would be totally normal, and it won't be until we break through a level like that that we either get a direction to the upside or we get a direction to the downside and start moving again. So this is likely what it's going to look like if we, yeah. So did you have levels on this on this
Yeah, we can talk
consolidation here?
about that. We can go
Yeah. You
bit
want to
by
walk
bit
me
now.
through it? I'm looking at SPY. I can go to
Yeah, yeah. No,
ES.
no, no. We'll do SPY. We'll stick with that because I know that's what most of your viewers are
Well,
in the
just so you
options
know,
now.
so this is a 1 hour chart. We're just now breaking structure to the
Sure.
downside.
Yeah. No, I see this now, and is that dang 435 all day has been really causing some trouble, but now broken, and
Yeah.
I'll look for maybe a potential back test for a short trade, but it looks like we're finally
Yeah.
making.
So this is for our system, my system, right? It's really just orb high, orb low, pre-market high, pre-market low for your basic trends. This is right here is that pre-market low. We never were able to get over our pre-market highs today. Like we just wicked it, by the way.
Yeah.
And so for the most part, all day has been kind of leaning downside. Qs, by the way, looked a lot stronger this morning. Qs
Right.
definitely.
And RTY, not RTY, sorry, IWM, RTY, same thing, was looking a bit weak today, this morning.
Still.
So for me, that was kind of a little bit of the potential canary in the coal mine, suggesting that we'd get a little bit of a pullback. But just my general overview, exactly kind of what you were saying earlier. The market only has two methods of price delivery, and that's either trend or balance
Yep.
consolidation, right?
Yep.
So we have just obviously made a moonshot, so it's not
Huge
unlikely.
moonshot.
Yeah. So this was expected today and maybe into tomorrow, as well as we look to find acceptance, up in this area. The other thing that I wanted to mention, and we'll go back to SPY now if you want to pull up the chart, but exactly that overhead, basically that same range that you had pointed out, that was our previous, I think that was what was about the monthly swing high, but that was that balance zone that we came right into that you had marked off. Yeah, you can see it there,
This
where
this right
yeah,
here.
exactly, yeah. And that's just, and we really over exceeded what I thought was going to happen. I thought we'd come up and test the back side of it, and then from there it would
Like
it
down
would
here.
trigger the short. Yeah, but we clearly smashed through. But we have not gone over it yet. And for me, for the weekly, if we're looking at a weekly chart, for me, if we actually start to find some acceptance, and it's going to take more than a day, since we're going to be, since I'm speaking in a weekly time frame here. So really,
Yeah.
what I would want to see is start seeing a weekly close over that, and then we can actually say we've created a new weekly uptrend, but that
Yeah.
hasn't happened yet. We have created a new positive daily uptrend, though. That is true, from my opinion. So weekly still has some work to do. The daily, we've got a new uptrend there, and after having that nice kind of inverted head and shoulders breakout down by basically 420, was a little inverted head and shoulders we were looking for, and then we recaptured the earlier in the month swing lows around the 5th. So once we recapture that, okay, we're looking good here. The concerning thing is the structure that we created right on this move
Yeah.
up. What do we have? One, two, 2 or 3 gap days up. Okay,
Yeah.
so the structure is not very is really poorly made right now, and there's tons of low volume nodes on the volume profile. Areas in the auction where we don't have any price being transacted, and typically what you see when you have that weak market structure, if we do start to find an offer, it's going to be very easy to come back and fill those gaps, right? Because the market at all
Yeah.
times is seeking balance, right? And there's no balance there. Nothing was traded in those gaps. But that doesn't mean, that, all is over for the bulls. We could easily just come back and retest some of those areas, fill out those areas of low volume, and then just continue on our merry way. So for me, the big areas I will be watching is some of them that you did also mention, that 423 area, 424. We're starting to see some nice confluence there for any moving average traders. You do have the 200 there sitting in that area, as well as the daily 20 and 9.
Yeah.
So, we may not actually end up filling the entire the second gap, we might not fill that all the way and actually find a bid in that area. But I'm more on the side that we're going to have to come back, repair some of that structure, and then we can continue our way. So. But if we do get those retracements, that's when we may want to look, if the Santa Claus rally is true, for those potential buys, into December, for December or January, for potential swing trades to resume the trend, right? And then
Yeah.
we'll have to see if we actually do take out those those mid-October highs, the highs of that balance, which is basically 438, 437, somewhere in that range. Let's see where it actually is.
It's gonna be up here.
437. We'll
I
just
have
call
it.
it, it's close enough to 438. We'll call it 438.
Yeah.
But we'll also keep an
436.20.
eye. Yeah, I think, 440 obviously is going to be a level we'll be watching as well. A whole number, big,
Yep.
everyone's going to watch that. But then at that point, if we do see that, okay, great. We're in a new weekly uptrend, and we can look for, a little bit more confidence in the move. But a lot of great, regardless of the poor market structure that we did create on these gap ups. The retracement would be fine and normal. We would still be technically in a daily uptrend, and then we could look to resume that. Things are going to get a little bit dicey for me if we start getting below that 424, 420. Last stop is going to be 416 for me.
Oh,
But we could come all the way there,
yeah. That's
and
where we
still
first
have
broke
have
structure.
hope.
That's like that's way over here where we like 417.80, something like that.
Right, and
Yeah.
it's those prior, it's that where we found that support there earlier, right? And that's
Yep.
that early October lows. So structurally speaking, as long as we're holding that, okay, we're still all right. But ideally, we would want to see that daily lower high probably created in that 424, 424.50 area, and then we'll be good to go. And we also have some nice confluence there, as I mentioned, with the daily 200 SMA, 9 and 20. So we'll be watching that. But I am, like you said earlier, as we just started, do you really want to be a new money long up here if you really have major
Tough.
capital, from the
Yeah.
institutional perspective? No, not at all. So, I'm just going to, and that doesn't necessarily mean to, hammer the shorts, just thinking that we're going to come down, but we're going
Right.
to have a plan for both of our sides and wait to see, if we do start to really start to, sell. Everybody's very comfortable with buying the dip right now, buying right all last week. So,
Yeah.
there's going to be a time where we're going to have one of those days where the dip keeps dipping, and people are going to keep trying to buy it. So let's just not get caught off sides and be aware of that weak structure that we have below, because it would be, just normal price action and very typical just to see some type of retracement through that and work that out in the auction. So, yeah. I mean,
Yeah.
it wouldn't
No,
be crazy to see 424, 422 this week.
I mean that. Yeah, it feels like it's a really long way away. I was, as you're talking, I was just looking at the structure, see if like there were some serious fair value gaps. I think, just as I'm looking at my volume profile, like below 433, there does seem to be a pretty heavy volume shelf here down to that low end of that, like Friday's NFP level. So yeah, this is like the halfway. So sub 433, we could be pretty flushy to fill this volume pocket. And I say some people call it fair value gap, some people call it a low volume. It's technically, the old school term is low volume pocket, right? Very big pocket here. We did not have a lot of volume. So the market, in terms of when Sharky's talking about balance, right? The market really needs, it wants to retrace this area to find its balance in that spot, right? Which means, doesn't mean flush necessarily. It means like chop, right? So like come down here, maybe it flushes quickly, but then chop through and then find the next direction. And it could just be sideways, guys.
Yeah,
Right.
yeah.
So yes, now we coming off of a very quote unquote oversold condition. Now we are somewhat in a short-term overbought condition. And there are some pretty heavy volume pockets down here. I mean, that this is that 422 ish level. And I mean, if this is the high for the week, right? So far, what this looks like is that we're locking in the high of the day in the first hour of trade. And if we're looking for trends, what we're looking for is the high or the low of the day being locked in that first hour. So if this is how the day is going to progress, this looks like the high of the day was locked in the first hour. And if we close towards the lows, well, then I do expect that we do retrace at least first down to that 431 level, stop, pause, maybe chop around a bit. Then we get that's Tuesday, right? And then Wednesday we'll find the next direction. If we lock the high of the day in on Wednesday morning, then yeah, we could be looking at that 425 type 422, volume shelf to get filled in, but I don't see like that's.
Dang, we just had that 435 back test and I missed it.
It's all good. I mean, if it's a short, then you got a lot of points to go. This is just starting.
Yeah, that's true.
Actually, so Miss Cleo said trend day. Sometimes the trend starts in the back half, but that's what I'm looking at for right now. I think the cues. A couple of guys had some quick questions. What are the cues?
But it'll be interesting next week. We'll also, when we get together, we'll look, and if that plays out, we'll see, and you guys will also be able to see on the volume profile if we do come down into that area how that starts to fill out. And so that just maybe if you guys want take a screenshot of it now so you can see, and then later on in the week we can come back and or next week and compare if we do trade into there, and you'll see how that starts to build itself out.
Yeah. I'm just gonna do some quick. So I'm putting my levels in now for some of these other indices. By the way, if you guys aren't doing that, do it here now if you haven't yet. So all I do is I just mark Friday's high. So this is what we're saying. The cues were actually fighting quite a bit on Friday this morning, trying to find that basically that pre-market high and get over it, but they weren't able to. NFP low. So here we go, right? So like if we can't, right, what's true is that we retrace a lot of whatever we just did back to Friday's low. And then just level to level. So on the Qs though, we have a midpoint 365, right? So that would be a very basic retracement. And then that Friday low 362. Pre-market low when we got the data. Below that, then yeah, you're probably looking short, and you go level to level on the Qs. So it's I mean, anything below this pre-market low right now, call it 367. Next up, 365 and change, 362, and then you have a big old gap down to 355. Hopefully, we don't see that, but that is a pretty heavy volume shelf on the Qs. Just one to watch out for. I think Apple's really going to give you that story if you do start to fill this volume shelf. So when we look at these kind of things, these low volume pockets, 365 to 363, that's going to be a big quick one. And then 361 down to 357, that's a big one that could get filled pretty quickly if we do start trending down below 362. So just careful there on the cues. Over Friday's high for any of this, then we go straight upside. Don't think that we can't continue higher just because we've gone so far. Remember, people thought, oh, we couldn't go any lower because we'd gone so low coming into this, and it just kept going lower. So follow the trend. Trend is your friend, right? Like pre-market high, pre-market low. That's, for me, that's all you really need overall. Man, gold was one I was like, I'm thinking. So gold is one that has been in a holding pattern, by the way, guys, for a while, right? So this holding pattern on gold, I do think gold is tradable this week. This holding pattern has been about 20 days, give or take. Yeah, about 20 days here. So this one I do think is ready for another break moment, either to the upside. I'm leaning bullish here, but if it does get below like 1975, I do think it's a very high probability of retracing a significant chunk of that. I'm in GLD, the ETF GLD here. Hopefully, I'm long. But if I get a daily close below 183, it's not going to look good, and we could see some pretty quick moves to the downside too. So I want to be cautious of that. So I think the commodities trade will have legs potentially this week in either direction, but you could probably catch a good directional trade on those. I think. Let's see, APPS. Oh, is that Jesse? Jesse's in. What's going on? So that was thoughts on the cues. Someone asked, is Santa Rally always upwards in direction? You know, it's not always upwards in direction. um, well, okay, a rally technically is upwards in direction, but you know, it's more a question of, is there a Santa Claus rally at all, right? So if we do go up, yeah, they're going to call it a Santa rally, and that's what that's going to be. Oops, they just reloaded. All right. Do we want to go through and look at anything else? What's our time check? I got a couple minutes. Sharky's already trading. He's live. Let's just do a quick.
Frank's like, I'm short it out.
Yeah. Oh, we got some of the crew. Yeah, there's Frank. He's live, short on cue. I got to figure out how to take this spooky overlay thing, spooky font off. It's not time anymore. So I did have one. So this is Meta. So this is a Meta's weekly chart, by the way. Really high and tight here. I like this one upside. I know it's if we do pull back, it's no good. But what I'd say is like connect these lows right here. So this is my kind of spot, right? It's toying with this upside break. Over 3, I'm going to call it 319, then we should start hitting these next highs, right? But I don't want to see it get below this this trend line here. If we do this, it might fail, something like this. But otherwise, just I'm kind of looking for this kind of break.
That's I mean, and that's great having both plans there. And if you are long, you gotta ride it as long as you can, and then if it breaks, you'll get
so like
the chart get you out.
It's by the way, Meta a couple times has had like it's been trying. It's really trying. High and tight right now. It's not firing off. I'd rather probably get long a little bit lower. So I know some of the guys got long on Friday. What I'd say is where's VIX? So VIX, VIX. We talked about this last week that the VIX is, if we get a little bit of a bounce, the VIX is going to get absolutely destroyed. And guess what happened? The VIX got demolished. And by the way, we are coming into, so 14 on the VIX is about your annual kind of average. So if we get there, that's where I want to be kind of cautious, maybe looking for some hedges at that point. But if we do get a turnaround here and we get a heavy reversal for this week, this tells me right now that in general options are not that expensive. So maybe we get some short side trades that pay out pretty well. But if we also get continuations, that VIX is not expensive either. So now that we've retraced where we've come from, options in general are very inexpensive, whereas last week they were freaking through the roof. And if you guys were trading last week, it was a very rough week for options, just because of that, right? So, and we talked about that. We talked about using debit spreads versus just outright options. So this is another one, Tesla right now. So on the weekly, this is tough, right? Like this is super tough. I like Tesla. I mean, it's not. I own Tesla. The spot I was really looking to get long, it would be 180. It's in a really rough spot right now. That's what I'd say. So today we're playing with this 200-day moving average. I'm not going to go I think you could get from a day-to-day perspective, looks like we're having an outside day on Tesla today. So it looks like the downside on Tesla would be to like that 212 level. We're breaking below that 200-day moving average. That's that red line here. So this candlestick on the daily time frame, we made an equal high and a new low. This is possibly going to be a pretty hard rejection down to that 200-week moving average around 210 for the week on this guy. Is this a higher high? Yeah, it is. Higher high in the pre-market and a lower low. Ooh, that's unfortunate for good old Tessie right now. Man, oh man. So, that said, a retrace here, I do want to be cautious, right? So a retracement is going to bring you back to that 210. That's just an average, like 50% pullback, and it would also line up with a retest of this base right here. So hopefully she stops there. For now, that's where she looks like she's going. Yeah, we're below yesterday's low, so that's your target in the meantime. 212. It seems like a lot. It's a solid $5 away from here. Ooh, as SPY is Man, Microsoft was looking good, not so much. Man, everything's turning around on us as we speak. That's all right. We've had a huge run. So I had a lot of people asking me about Roku, and like throughout the week, at least in our group, and like when short Roku, when Roku short. So what I'd say, remember, fundamental event creates our technical level. Here's our fundamental event for earnings right here. Boom, $60, right? Like I don't think Roku ever gets there. If you wanna, and we've waited this long. Roku had a 2-day continuation. Our buddy Mikey was looking at that prior the last couple earnings, a 50% retrace of this earnings gap up right here to here is going to put you about $73, right? We were looking for a day that Roku ended up trending below its pre-market low and below its opening range, right? And so that is today. So here's your pre-market low on Roku. Here, pre-market low. And if you want to call it an opening range, here. Or this is pre-market low here. And that's really what I need to tell me that a change in trend is going to happen, right? As long as we're below this box right in here, I should be looking at this retrace. So I will swing this through the week. I'm in $80 puts entered just around $1 right now. I don't know. They're about the same price. So as this fights, it was $1.50 up here. So we're looking at pretty much exactly where it would reject. So to me, that's a swing short target. First target 70, 78. And then that
50. Probably come back and retest those highs there in the 15, right?
Yeah. That's exact. So that's looking what we just did, right? So on the 30, right, we're retested right there. So this could be playing out, and we're right into that kind of overhead supply right here. So it's not going to be until we're significantly lower than that. This could start really accelerating sub 78. So if you want to be really like safer, wait till you're sub 78. But between now and then, it's a good chunk of change for an options trader from that perspective. Do you have anything on watch right now?
No, I mostly trade the indices. So I'm watching that relative strength in Apple today up. It was almost up 1.5% earlier, but now it seems to kind of be rolling over a little bit with the rest of the market. But yeah, there are a lot of the tech names that are holding up pretty decently today. With Meta, as you mentioned, Amazon isn't bad, Apple.
Yeah. I was pretty surprised with Apple in general, like because we had started the week way low at like 165 last week, and then we had our earnings, and then we were tagging almost. So I have this 182.90 and change as our prior all-time high. So this is what my larger time frame chart looks like on Apple here. So this was that last high. So that's what we're kind of battling with right now. This looks like it's kind of chopping, right? Like I was hoping to get an entry closer to 160 to retest this broken trend. I think that might have been what you got. To be fair, like and
it was pretty close. It was pretty close.
It was pretty damn close. Yeah, it was. What am I?
Oh, look at this.
I was $3 off. And honestly, a lot of times that's what we get. I had something very similar on Microsoft, and my Microsoft entry was, I just had to say screw it, right? Because I was trying to get this 306, right? And I was like, we're 310, and it wasn't getting any lower. I got low. It's like barely lower. I was like, I just need to go, and I think I ended up hammering it this day, in strength probably. So like it started going up on me anyway. So I was loading here, even though it didn't get to my target that I really wanted it at. It was close enough, and I think all of these aren't like I'm gonna go and sell them. Especially Microsoft, that looks really strong, right? Like if Microsoft holds this 354, that's holding Friday's high. And if you look at this weekly on Microsoft, and I would go, it's a new day, right? Or new week. Look at this weekly chart. I mean, does this not look like incredibly bullish? Right? Like that's a pretty bullish chart to me. So this is our prior all-time high here. Yeah, I mean, it's hard to be bearish on something like this. But who knows, right? But anyways, that's just a big old cup and handle if I've ever seen one, man. So let's say if it pulls back 350 is that level, right? So if it can hold support over 350 this week, That's going to look really good. Weekly squeeze to the upside. Wow. On Microsoft. You check this longer term chart on this guy?
Oh yeah, I was looking at it
This is a
yesterday
damn good
or
looking
today.
chart.
Yeah.
Um, so I would just, careful though. This is like one of those patterns where it's so clean, it may be a little too clean. Um, you know, everybody's
But it
gonna
does
see it.
look nice.
So it does look nice. I'm looking for a
But you also got to, yeah, I mean, you have the relative strength names, but you also got to consider, and
we,
there are the names
yeah,
that look good, but you got to consider where SPY is, where the rest of the market is too.
yeah,
And yes, you can have those outliers, but do I still want to jump in along in Microsoft? No, not that much, just because of where the rest of the market is or the broader market. So it's a
yeah.
little tricky.
I know it looks bullish right now, but what I'd say is if you get this pullback, and even if it's to like this 330, 340 level, this right here, this little volume shelf, where we on the right hand side of my screen looks like a little mountain range. I would look for this level to act as defense, right? And that's going to be from 330, right around 335 down to 330. Um, and quite frankly, if you do get a pullback like that, a lot of times these look so good, this it's too good, so the market will pull it back sometimes and throw you a little curveball like this, where you're right, but you're wrong because you're off on timing, right? And by the way, if you're not right on timing, you're wrong.
Right.
So, anyways, all right, guys, I think we've hit most of everything. Um, Nvidia still. Let me see what is Nvidia. Let's see. Nvidia was another one. So this is the one that to me, I was actually looking long, still looking long, not breaking out yet. So I was looking at this little trend to get broken. It's broken. It's not holding. I'm gonna sit on a calendar personally. Um, you might get a pullback. We'll see. If the market can't get its act together, this is just going to have a hard time. But this is one where, look, we had a clean range, and the range was from like 400, 408, really, up to like 485. So I think we're still in that range. I would wait for this to break. If not, 433 was that level that I was looking to get long otherwise, and you might get a pullback to that. Nvidia moves fast, right? So that might even happen right now. And I would be looking to exit stage left at that point on shorts. There is a fair value gap that's all the way down to 409. You never know. Nvidia kind of does what it
Now
does.
we're getting some acceleration here in the market.
Oh shoot! Oh my puts. Okay. Anyways, all right. I think we're good. Sharky, you got anything else you wanna go over while we're looking at this?
Yeah, just be cautious. We are obviously right now intraday pulling back a little bit, but when we were, I think the biggest thing is when we were trading in that range a bit earlier. I posted this to my Twitter. Just always just remember that just because you want to trade, right? Everybody usually on Mondays are hot and heavy to get into the markets. Just because you want to trade doesn't mean it's a good market to trade. It doesn't mean that it's the optimal price, price action, delivery to trade and engage with the market. So I think the big lesson for earlier today, although we are selling down now, is know when there is edge and when there isn't, and there's nothing wrong with just observing the market and saying, okay, these aren't conducive times that I really want to be engaging in, so I'm just going to sit and wait. A lot of times, we get so short-sighted and think, oh, this is like, I have to be trading now, market's open, or I'm going to miss it. There's 250 days or 240 trading days. Sitting out one day isn't really going to make a difference. There's going to be 1,000 other opportunities that you will miss and that you'll catch. And there's nothing wrong with that. So although we are getting now a more constructive move as far as the price action, really putting in some downside. Yeah.
What happened just now? It's going.
The lesson earlier was to sit and wait. And,
He's like, boom.
yeah. And now there's a little bit more of an edge, right? We've started to create a trend. We've made a lower low. We made a higher low. Okay, now we can wait and actually start to say maybe we want to take one more or something like that. So Just be nimble. Don't be too one-sided to either direction. Let's just keep an eye on that bigger picture setup, because we could, like I said, we'll probably fill some of those areas to the downside.
Yeah.
And then, but we want to remember, oh, hey, what's going on in the daily here? Are we coming into these major key levels? Maybe this is a time that I want to actually engage in some longer term stuff. So just keep your eye on the prize, bigger picture, always have a plan. And that's it. We'll do it again next Monday and see where we are.
Yep. All right, guys. I think that's good. That's the 50-day on this on SPY. If you caught that short, good job. That's a beautiful trade, man. So then we would extend below that. But anyways, cool. I think that's it for me, man. It's been real. I always appreciate you jumping in. Always fun when I don't have to be here by myself, dude.
No, it was great. It was great.
Yeah,
It was great.
appreciate you, brother.
All right.
And
Thank you, everyone, for joining. And I hope everybody has a great trading day. Let's have a great trading week. So let's
on to the
all
next one.
follow our rules and kill it.
Yep. See you guys on Spaces. Peace.